Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, April the 6th. So we wake up this morning, much as how we closed out the program last night on Sunday Night Stock Charts Live. We had the S&P futures spiking up higher, and we'll go to that chart in a moment, the pre-market futures. But the question that we need to ask ourselves prior to going into the new trading day is, what's the strategy? Do we chase this market higher because of FOMO, fear of missing out? Or do we appreciate the fact that we've seen this act before? Meaning, we are in a bear market. We have seen from prior bubbles, and I've had a couple of them now. This is my third. We have seen this show before, and it doesn't end well. So a couple of questions need to be asked before we begin. Good morning, Trent. And I think this will simplify it for a lot of people. And I've used this chart quite often of late, and I'm going to keep using it because it matters, and it's not going to get any better anytime soon. And the question is this: is this market cheap? And taking a look at the chart in front of you, and you can see it's magnified here. And this is as of earnings for Q4 PE ratios as of Q4 2019. It does not account for the current situation we find ourselves in and expected earnings for Q1. And at current, we are just shy of being overvalued. And this is as of PE ranges for the Q4 quarter of 2019. So think about this. What's going to happen when earnings are reported for Q1? The question becomes simple. Do you believe that we will find ourselves to be undervalued, fairly valued, or overvalued yet again on both a current PE and a forward-looking PE? I would argue that we're going to find ourselves overvalued yet again. So do I think that stocks are cheap here? By no stretch of the imagination do I think that they're cheap. Good morning, Tommy. Good morning, Lau. So I mentioned earlier that we've been here before. And I want to bring you back to this is the financial crisis. And this is prior to Lehman going down and TARP. But you could see that we had bear market rallies, and they didn't end well. Bear flag setups, and they broke. Bear flag setups, and they broke. Over and over again. Now, you bring yourself to current day, and you look at what we're forming right here, right now. And as of, good morning, Kat. You're right, 1,000% right. They stopped giving guidance altogether. Kat just put a comment in. A lot of companies not giving guidance, not good. Correct. So at current, we're off the lows slightly here. Let's just say we're going to go up to 2,600 today. And let's annotate the chart. Maybe we'll overshoot, maybe we won't. But 2,600 puts you right here. And maybe, let's get rid of this. Maybe we'll war game this out. Maybe we'll even overshoot to the upside. And there's our trading range. Does this setup look anything like, going back to the chart of the financial crisis, this setup, any of these? If it doesn't, then you should be buying stocks. If you believe that this is going to be the trajectory that we're going to go, meaning W formation, which we have not had that right leg of the W formation yet, or a V-shaped recovery, then by all means, you're missing the boat. You need to be buying stocks. Me, I'm looking for an opportunity today to lean into, maybe not even today, maybe tomorrow, but we will send out alerts. We'll be looking to lean into the short side of this market. Let's go to the pre-market activity. As a matter of fact, I want to bring up zero hedge really quick, see if there's anything new out there. Yada, yada. More China. All right. Nothing really happening here. All right, so the E-mini futures still up at current 3.66% on the morning. This is a 15-minute chart. Let's go to a 4-hour. Very strong move here, but we have resistance immediately above at that 2600 mark. Russell 2000 up nearly 4% with resistance at 1100. Now, the Russell, we may get a little bit more out of here because it's underperformed. It's a little bit more oversold, and there's a lot more shorts to get squeezed than what you have on the large caps. So here's our trading range. Let's get rid of this. Here's our trading range at current. And you know that we're in trouble. If we'll throw up a tripwire here. We close down below the support level in yellow. And again, this is a 4-hour chart. So we're coming off slightly off the highs. It doesn't mean that we can't press higher here. We want to keep an open mind. My son called me last night talking about the market, and this is his first true test of a bear market. And my advice to him was, you need to trade the market that's in front of you, because he was making a killing in the bull market. Now he's trying to figure out the bear market. I said, you need to trade the market that's in front of you. If you have to, turn your monitor upside down and get used to it, because these bear market rallies are ruthless. Bonds. Check out the bond market. And I mentioned this last night, folks. I said this about the TLT. I was worried about the bond market. And the bond market is selling off this morning with yields on the rise. It's still at historic lows, meaning yields. The US dollar still up this morning, holding its gains. Hey, Pat. How do we take advantage of the morning up, the nugget, J-Nug space? So I think that with regard to Nugget and J-Nug, we sit with our current position. I mean, I don't want to go, excuse me, I don't want to go chasing it any further until we see whether or not we have a rally that's for real yet. So we're making. I don't want to make the presumption that we're going to hold these gains. Let's make sure that we do hold the gains first. Gold up one spot, 3.6%. It's capitalized. It's added more to its gains this morning. And this is only in the past few minutes that we put on another few dollars. 15-minute chart, yeah. We just went blasting up higher here. We're a little bit extended here on a 15-minute chart RSI. So in short, I don't think this is a market that you go chasing. Silver, of which we're long. Very good morning today. We broke out overnight. We were talking about this last night. Here's that breakout. Expect a pullback and a retest. On silver, looking very, very good here. Are we seeing any strength in the industrial metals? Let's bring up copper. A wee bit of strength, as they say in the old country, but nothing to write home about. You know, if the global economy were out of the woods, like everybody is betting on this morning, you would expect to see a bid under the industrial metals like copper. And while we're up, we're not getting a breakout. Let's check out Bitcoin. Bitcoin moving up higher. Nice move here. Up 5% this morning. Looks like it can go higher as well. Looking good. SPCE. Catching a nice bid this morning. Now, last night when we spoke about this, I mentioned I liked the daily chart. I did not like the weekly chart. We do not have a breakout yet on a daily basis. So the game plan here is that, you know, you're long, you have I'm assuming a profitable position on it. Let's see whether or not we get a breakout here. It's quite possible. Retest and a continuation move higher. The VIX moving up a little bit here this morning. Not much. We still have a 4 handle. Oil. It's well off the lows. We were down, what, 7.5% last night. We've come rallying back. Very good price action here. Nat gas. We're up strong overnight. We're still holding the support level. Let's turn this yellow. I still wouldn't be a buyer until we got that ultimate pullback and a retest of the support level at 1.6. But it appears to be liking 1.63 and holding. So the markets are strong across the board this morning. The question is, do we hold it? Let's go to some comments here. Gold also on the rise. Yep. Russ. True copper. China would need to place a big order. Y3U. Oil doing well. Yep. Okay. All right. So the game plan, folks, this morning is sit with current positions. I don't see any need to scale out of existing, but we will be looking to open up or add to existing short positions. And the only thing I'm very grateful for is that we did not go adding. We saw the buying come in on Friday afternoon. This is why you need to pay attention to the final few minutes of trade. So the buyers come in, 15-minute chart, S&P 500. Outside reversal bar, and that was your warning that they would try to pull something like this today. And we sat on our hands, did nothing. So be grateful for paying attention to the little signals that the market sends you, and it gives you a better opportunity in the future. And I'm going to leave off here with, again, if you try and decide what to do today, it all comes down to value. Technical analysis is extremely important. So we can go by the technicals, but we should also pay attention to valuations as well. According to this chart using Q4 2019 PE data, are we overvalued, fairly valued, or undervalued? We are here this morning. Red is overvalued. Blue is fairly valued. Green is undervalued. Can't make this stuff up. It's fact. And does this chart, the post-financial crisis, bear market rallies, as highlighted in these blue lines, does that look anything, any semblance of what we are seeing set up right here and right now? If you don't agree, then you should be buying stocks. If you agree, then you should be looking to strategically approach this market and look to lean to the short side, if not lighten up on some long positions and make those paper profits real. And with that, folks, I'm going to ask you if you could please smash that like button. I'd really appreciate it. And everybody have a very profitable trading day. And I'll talk to you soon. Be well.